What do companies such as Peloton, Allbirds, Roblox, Stripe, and even Facebook in their early stages of formation have in common? And the short answer to that question is Tiger Global Management. And while a lot of people have not heard about Tiger Global Management, it is key to understand that this particular fund or firm has invested in a lot of these companies during their early stages of formation. And irrespective of how these companies are performing at this point in time, you can imagine the realized rate of return that Tiger Global Management has had since it was involved in the seed rounds of a lot of these companies, all the way through to when these companies became public. Tiger Global Investments, the firm's flagship long-short fund, has compounded a 21% rate of return on a net basis for 20 years. If you were lucky enough to invest in this fund at its inception, it would have grown 43 times net of fees over the last 2 decades, compared to a growth rate of 5 times for an investment in the S&P 500 index over the same period. The firm's long-only fund, called Tiger Global Opportunities, has compounded at 22% net since its October 2013 launch. So who is Tiger Global Management? Tiger Global was started in 2001 by Chase Coleman. Chase Coleman was a protege of legendary retired investor Julian Robertson. Chase Coleman grew up with a privileged background. His father was a partner at a law firm, and mother owned an interior design firm. The privilege obviously comes along with several benefits. For example, Chase had friends in very high places, inclusive the son of Julian Robertson. After graduating from Williams College, Chase began his career at Tiger Management under Julian Robertson. In 2001, Chase started Tiger Technology, which later rebranded itself to Tiger Global Management, using $25 million in seed money he received from Julian Robertson, who in turn closed his own investment firm in 2000. Chase took this $25 million and grew it to over $65 billion in assets under management over 20 years, personally amassing a fortune estimated at over $10 billion. So obviously the question is, how in the world did he do it? Well, in short, having the $25 million as seed capital definitely goes a long way. Additionally, having access to Julian Robertson's back office, his infrastructure, as well as his contacts and clientele list definitely goes a long way as well. However, this should not be misconstrued with the notion that back in 2001, we were also in the thick of the dot-com bubble. According to a letter sent by Chase to his investor base, in the early days, Chase drew on Julian Robertson's core philosophies, such as to buy the best companies and short the worst. This is just basically a fancy way of saying buy good companies and sell or short bad companies. Needless to say, this whole strategy was basically taken as a grain of salt by the investment community, as it's obviously not all that revolutionary, unless, of course, somebody starts outperforming the realized returns from other investment companies, and that is exactly what happened with Tiger Global Management under Chase Coleman. While the internet bubble was about to pop, these guys were basically trying to identify industries, sectors, companies that they could potentially invest in, and they came across a big winner. Tiger Global saw an opportunity to invest in China, in not only the public markets, but also the private companies in the e-commerce space, and correctly predicted the growth of internet-enabled retail in the country, thus getting some early wins. Tiger invested early in 3 Chinese companies, Sina.Corp, Sohu.com, and NetEase, all of which were later dubbed the Yahoos of China. But through this experience of investing in a lot of these private companies in China, Tiger Global Management, they did pick up on a big thing, because they did realize the potential upside when it comes to investing in companies in their seed rounds. Now, this is by no means to say that everything that Tiger Global touched in their initial days turned to gold, because they did have several mistakes, but the key thing there is that they did learn from a lot of these mistakes as well. For example, one of the biggest mistakes that Tiger Global Management made was they were heavy on banks and cyclicals in 2008, and we all know how that panned out. They also regretted missing out on deals such as Alibaba, where they could have invested, but they did not due to what they perceived to be arguably a very high valuation. These successes as well as failures have helped Tiger Global Management to refine the strategy over the last many years. Tiger Global Management basically classifies themselves into really two businesses. They have the public business and then they have the private equity business as well. Tiger Global Management's strategy continues to be focused on early stage companies in consumer, enterprise, and financial technology in the United States, China, and India. They are focused on technology and believe that technology improvements is laying the groundwork for future change, which they also believe is accelerating at a very rapid pace. Tiger's private equity business that particularly focuses on venture capital has had a catastrophic growth over the last couple of years, with many of their companies entering the public markets and the remaining being acquired by others. Now that we've talked about their strategy, let's talk about how they have implemented the strategy and how successful it has been. In 2003, Tiger Global started its first fund to invest in private companies, raising about $75.8 million, leveraging contacts and also the successes experienced from the primarily Chinese investments. While that $75.8 million sounds like a lot of money, it, for all intents and purposes, is nothing when compared to what these guys are raising at this point in time. Their last fund raised over $10 billion and was fully subscribed to. By 2009, Tiger Global Management took early round stages and stakes in companies such as Facebook as well as LinkedIn, and the rest of that is basically history. The strategy that Tiger Global is using to grow so fast is a shock and awe approach. They move faster than others and generally give companies what they want at higher valuations than their competitors. By moving fast, they avoid sitting on their own investors' cash for as long as 3 years. Tiger learned early that missing out on a hot deal is a much bigger mistake in venture capital than overpaying for the same deal. Successful VC investments are seldom successful because they're haggling over the valuation. So Tiger is overpaying for deals just to shut out their competitors and give the companies they're investing in basically whatever they want. Additionally, Tiger Global Management has realized one big major thing in the venture capital business. They have realized that they should put their pride away and focus on what is it that they are good at. They do realize what they're good at is providing capital to these businesses. They don't ask for board seats, they don't interfere with any of these company operations, and for that matter, what they do is they provide these companies with access to Bain & Company, which is a strategic management consulting firm. Lastly, and this is another key differentiator in the strategies that is used by Tiger Global Management relative to some of their peers, is these guys are perfectly comfortable in sitting on the shoulders of a lot of their brethren, particularly from a due diligence perspective. If the likes of Sequoia and Kleiner Perkins and Andreesen Horowitz all have term sheets out on a company, Tiger is more than happy to just rely on the judgment of a lot of those companies. So now that we've talked about the strategy, we've talked about the implementation of this strategy and some of the growth that this company has basically experienced, what are some of the outcomes thereof? In 2021, they invested in over 130 companies, which is basically a 10x increase to what they did back in 2020. And now that these guys have so much capital and their funds have grown, as I referenced earlier with the $10 billion fund round that they raised just in the latter half of 2021, these guys are now able to really push their weight around and invest in some pretty large deals. As long as the world of startups and innovation continues to grow, it certainly seems like Tiger Global Management is in the driver's seat when it comes to seed investing rounds for a lot of these companies. I hope you enjoyed the contents of this video, talk about how Tiger Global Management has basically scaled from a very small company of about $25 million in investments to the behemoth that they are today at $65 billion of assets under management. And if you did like the contents of this video, remember to like, subscribe, and ring that notification bell, and I'll see you in the next one.